Have you ever wondered how your friends and coworkers manage to post about their luxury vacations, fancy dinners, and glamorous parties on social media? It seems like they have similar incomes to us. How can they afford all of these? You are not alone in feeling this way. It is natural to compare. But are they really able to afford these luxuries? Why do they seem so wealthy? Let's find out the truth together. In the end, we will introduce 2 strategies to get you out of credit card debt quickly, so stay tuned. According to the Federal Reserve, Americans' total credit card balance reached $1.125 trillion in the first quarter of 2024, slightly lower than $1.129 trillion in the fourth quarter of 2023. As we can see in the chart, this level of debt is still much higher compared to the last 2 decades. About 47% of credit card holders carried a balance at some point in 2023. This means nearly half of the credit card holders were in debt last year. Now we can see accepting credit card debt is more popular than we think. It is likely that many friends or coworkers also have credit card debt. Consequently, social media posts showing people enjoying nice things or living lavish lifestyles may often be funded by credit card debt. Understanding this can provide perspective on the financial realities behind seemingly glamorous lives depicted online. Unfortunately, most credit cards charge very high interest compared to other types of loans. In today's high inflation environment, a very common credit card interest rate is between 20% and 30%. For every $10,000 you owe, you will have to pay back $2,000 to $3,000 per year. This means owning credit card debt, you may need to pay double of what you own if it takes years to pay back. What if you are making the minimum payment every cycle? Well, as the interest rate goes higher, making only the minimum payment does not change the total amount you owe because your debt is also compounding as time goes. It can only get bigger and grow faster if you are not paying it fast enough. Despite what you are seeing posted on social media that they are living good lives, it does not mean that people are having much better financial situations than you. All this information you are receiving could be misleading. It is natural for us to compare ourselves to others, especially when we see people flaunting their extravagant spending on social media. However, what we see online is not the full story. Some people may receive financial support from their families or have other sources of income that allow them to maintain their lifestyles. In today's economy, many parents are financially assisting their adult children with living expenses, which frees up money for discretionary spending. In this case, parents' money is serving as a safety net. Also, it's not that hard to tell if your friends or coworkers are making enough to keep them afloat. You all may have similar pay from 9 to 5. How about after hours? Are they hanging out with friends or shopping? If they do anything like that, most likely they are not making extra income out of these activities. With similar pay scales like you, clearly they are struggling financially. What if they have a second job after work? Or are they launching a side business during their free time? That can explain the reason why they would be able to support a better lifestyle. We only have 168 hours a week. Typically, a full-time worker spends at least 35 hours working. If you are able to sleep 6 hours a day, then that is 42 hours a week. In the end, you will only have 91 hours or fewer for other activities. So if people use the rest of the time to leisure rather than earning an extra income, then we know they may not be financially stable. Based on the Bureau of Labor Statistics, about 54% of working Americans report taking on at least one side hustle in the past year. The reason is very simple. People need money. In this high inflation environment, we know maintaining a basic living standard could be challenging for some people. Remember, about half of the credit card holders were in debt last year, so most of them are probably still in the same situation this year. We are not sure how many working Americans are having credit card debt, but it is clear that financial difficulties are widespread across various demographics. Working class, in particular, is grappling with economic challenges. So what we see on social media does not reflect the true financial situation. A lot of times, people only share what they want others to see. Many highlight the high points of their lives on social media to show how successful they are. In fact, we cannot see the actual numbers in their bank accounts and retirement accounts, nor can we gauge how stressful they are mentally. There is always a hidden cost for them to show off things online. It is easy to see the glamorous aspects of their lives on social media and form an opinion based on those posts. These do not reflect what they are actually experiencing now. New cars, vacations, and luxury brands are only part of their lives. Truly wealthy people are actually very low-key. They don't flaunt their wealth to others. Most of the time, they might dress simply and speak modestly. If you are right next to them, you may not realize they actually have a significant net worth. Whatever you see may not be the truth. It could be the opposite often. They could be living paycheck to paycheck despite their amazing appearance. Please don't envy what other people have. Life is not a competition. Someone may be ahead of you in some areas, like purchasing the first $1 million house and driving a nice Lamborghini. At the end of the day, we can only control our lives and stick to our goals. We will reach our goals with hard work and persistence. If you are in credit card debt for a while, how can you get out of debt faster without much cash on hand? There are two strategies you can use to get yourself out of it. One is to do a balance transfer. This is when you go to a different bank and apply for a new credit card. Once this new credit card is approved, then you will be able to transfer the amount you owe from the old credit card to the new credit card. Usually, banks have pretty good policies toward balance transfers. Some are offering the first 6 months without paying any interest, while other banks may offer up to 21 months without paying any interest. If you owe $20,000 to a credit card with 20% interest, then it will save you $4,000 per year as interest. Without paying any interest, you can focus on paying debt much faster. This is like a secret menu hidden in some restaurants. The second strategy is to take a personal loan if the interest rate is lower than the credit card interest rate. Personal loans generally have lower interest rates than credit card debts. Try to apply to see what rate banks can offer. If they are offering lower interest, then definitely take the personal loan. Back to the previous example. Let's say you are approved for a 10% interest rate for a personal loan. Then you will only need to pay back $2,000 a year for the $20,000 you owe. Pay back $2,000 as interest is much better than $4,000. Once you receive the loan money from the bank, pay off the credit card immediately. With a much lower interest rate on the personal loan, you can save some money and pay off debt a lot faster. Lastly, you can combine these two strategies. After the balance transfer, you have a certain time period with zero interest. At the end of the zero interest period, you can apply for a personal loan. Now you are shifting your credit card debt to a personal loan with lower interest. You will be able to save interest money and pay off debt much faster. There are people who may seem to have more money than us, but it may not be the truth. We can still have a positive mindset and work hard towards our goals. Thanks for watching. Be sure to hit the like and subscribe button for more helpful tips like this. See you in the next video.